Last week, U.S. markets faced a stark reality check as geopolitical volatility collided with softening economic data. The S&P 500 fell 2.0% and the Dow dropped 2.9%, marking the second consecutive week of declines. The primary catalyst was an escalation in Middle Eastern conflict involving Iran, which sent crude oil prices soaring toward $91 per barrel. This energy shock reignited inflation fears. Sector drivers. Last week, energy, surging oil prices due to Middle East shipping disruptions. Technology, strong semiconductor earnings offset by rising long-term treasury yields. Financials, yield curve shifts and fears of geopolitical credit risk. Healthcare, job losses in physician offices and sector-wide labor strikes. Consumer discretionary, concerns over high gasoline prices dampening elective consumer spending. Industrials, rising transportation costs and fears of slowing global trade. Materials, slumping global demand and high energy-intensive production costs. Real estate, high mortgage rates and bearish sentiment on property valuations. Utilities, defensive positioning undermined by the spike in bond yields. Consumer staples, margin compression from rising logistics and raw material costs. Communication services, mixed performance as digital ad spend weighed against AI optimism. TOPIX change movers up for week of March 9th. Exchange and rationale. 1. United States, primary catalyst, rising inflation expectations and a shift toward defensive growth. Nvidia, AI infrastructure demand remains resilient despite broader macroeconomic market volatility. ExxonMobil, XOM, surging crude oil prices drive immediate revenue growth for energy. 2. United Kingdom, primary catalyst, strong correlation with Brent crude and defensive domestic yield. Shell, SHEL, direct beneficiary of the recent global spike in oil prices. Rio Tinto, RIO, strengthening China manufacturing data boosts demand for core industrial metals. 3. Europe, primary catalyst, increased defense spending and energy sector outperformance. Total Energies, TTE, high energy prices provide a tailwind for European oil majors. Rheinmetall, RHM, heightened geopolitical tensions continue to drive orders for defense contractors. 4. Japan, primary catalyst, positive GDP revisions and a value rotation in banks. Mitsubishi UFJ, 8,306, rising bond yields increase interest margins for Japan's largest bank. Toyota, 7,203, strong global demand and a weaker yen boost export-led earnings. Global conditions and trends. U.S. markets are grappling with stagflationary signals, falling employment alongside rising energy costs. UK and European markets remain highly sensitive to energy imports, with the Stoxx 600 retreating from record highs. Japan's Nikkei faces pressure from global risk-off sentiment, though corporate reforms continue to attract long-term value investors. Here at the Stock Market Performance playlist is this week's stock terminology learner. What is the global risk-off sentiment? Risk-off sentiment is a market mood where investors, fearing volatility or economic uncertainty, sell risky assets like stocks to buy safer ones like gold or bonds. Current 2026 context. Asset rotation, a move away from higher valuation AI tech stocks toward defensive infrastructure and commodities. Anticipated news, forthcoming week. The global focus shifts to inflation and growth data. Key releases include China's CPI, Monday, Japan's final Q4 GDP, Tuesday, and the critical US CPI, Wednesday. Investors will scrutinize these for signs of price stabilization. Additionally, UK GDP and US core PCE, Friday, will dictate whether central banks maintain their hawkish stance or pivot toward defensive rate cuts. Help us to bring you the best content possible. Subscribe, like, share, comment, and vote in the community polls. 2 broker offers. Sign up for rewards. See links in description.
This is the Stock Market Performance playlist, the sound of victory. Peace.